All right, what's going on, team? This is Alex here again, and I'm finally bringing you guys a video on this idea of our model being fractal. Okay, and I've used this throughout probably a dozen videos since the TA section, and now I'm finally going to clarify for you guys exactly what I mean by that. I didn't want to bring it up too early because it can seem a little confusing, and there was a lot we went over, and I didn't want to confuse you guys while you're just learning how to use the model, right? Because you don't truly need to know what I'm about to tell you to trade the model, but it definitely will help, and I think it's just really cool. So we're gonna go through this, all right? I have all my notes that you guys are gonna wanna probably look at while I'm talking about this, or maybe make note for later, especially these fractal notes down here, okay? This will tell you how the monthly relates to the weekly, relates to the daily, relates to the 4 hour, 1 hour, 15 minutes, so on and so forth. So that way we can see these similarities in our long-term investing trend and our, what's called our swing trade trend and our intermediate term trend and in our day trade trend, all right? So when I say the model is fractal, what I mean is that patterns we see on higher time frames are constantly seen and repeated throughout each consecutive lower time frame. And I don't know if you guys have seen any pictures of fractal images before, but here's a great example I've seen a lot. Right, you see you'll have one overwhelming pattern, and then you'll see the same pattern inside of this pattern, and then inside of this pattern, if you look at inside, there's the same pattern again, and inside of that pattern, really small, you can see the same pattern again, and so on, infinitely and forever. And that's the exact same thing with this model, all right? So everything we see on the higher time frames is just going to be repeated on lower time frames. Same thing with like Wyckoff's model, the accumulation model, right? Same thing with all cycles. And that's another reason I like using the stochastic with this, because cycles repeat constantly forever, right? So if you guys are going to want to look along at this while I'm talking, maybe take a screenshot or just, open a second window of the video or something. I'm going to get rid of it just because it's going to be hard to maneuver around with, or I might not get rid of it. Yeah, I'm going to get rid of it because I clicked the delete button a lot. So if you guys need that, you can go back, pause, take a look at it, right? All right, now let's make sure I keep on track here. So what this is going to do is help give us some insight into why I'm always using multiple time frames in this analysis. You'll see me talk about this idea of a top-down analysis. And a top-down analysis is where we start with our highest time frame and take that into consideration before any other time frames, and then move our way down from the monthly to the weekly, the daily, 4 hour, 1 hour, down to the 15-minute for our day trade, okay? And we'll see across all of these time frames, different patterns emerge that are all really a part of the same pattern, right? Okay, I know that might sound a little confusing, but you'll see it play out here with our indicators, right? And the reason we go from the top down is because we want to be playing in the direction of our higher time frame trend. More often than not, there will be times, a specific reversal, certain times in a market where it makes sense to go contrarian on a certain percent of your position. But majority of the time, we want to be trading with our cycle, in the direction of our cycle, in the direction of our trend on higher time frames, all right? So let's get into some of the fractal notes I got here, right? So key moving averages that we're going to be looking at here are the 8, the top of the bands, and the 60, the bottom of the bands. And also keep in mind this 30 as well, but really we visualize the bands as a whole. Like I'll talk about this section, the bottom half of the bands, as being, quote, the bands more often than not. And then the top of the bands will be the 8, right? And then we'll have the 200, the green line, and pi, the 314 period moving average, the red line. Okay? So, how is this model fractal like these images we see here? Well, if we check some things out here, we'll see that the monthly, and again, we're starting with the monthly because that's how we do our top-down analysis. The monthly 8 EMA direction, this teal line, is going to give us the direction of our weekly bands, which is our weekly trend. Okay? So, what can we infer from this? When our monthly 8 EMA is rising, it means our weekly bands as a whole are in an uptrend, right? Just as we see there. And the 8 on the monthly did not, it wasn't perfectly correlated to the bottom of the bands or the 8 here or something, but just as a whole, it fits the direction of the bands, right? And then on the monthly, so that's the top of the bands, the 8, that represents our lower time frame trend, okay? And I don't mean lower as in the 15-minute, I just mean one step lower from the monthly to the weekly, right? So the 8 on a higher time frame trend can represent the trend on a lower time frame trend. This is some hieroglyphic shit right here, my guys, right? But that's why I got the notes, so you guys can read it without getting lost in my words, all right? And then the bottom of the bands on the monthly, which if you guys know from the indicator video, we have 2 real sets of support, the 8 and the bottom of the bands. And sometimes you'll have price stop at the 30 in the middle as well. But really, more often than not, it's the top of the bands, you break that, and you retrace to the bottom, more often than not, right? And the bottom of the bands on the monthly is gonna line up close to the 200 and or pi on the weekly. And again, we want to think of these as areas more than specific points. I say this in like every other video, but these lines are not just specific dots on the chart. We want to think of them as areas, right? And we want to think about how price cycles to and from these areas, right? And so then we see price does not break the 8 all the way until this point, right? Likewise, our weekly bands were in an uptrend all the way until, well, really until this point, but price broke down here, right? And then we get a retrace to the bottom of the monthly bands, which lines up with the 200 in this case, right? On the weekly, you see that? And check this out. Let's look at that 8 again. What was the 8 previously? It was the bands. The 8 on the monthly, right, was the bands on the weekly. So let's go look at the 8 on the monthly again. Right there. And we'll see now it's not support anymore, but it's going to be resistance in this area as the bands are now in a downtrend, right? And can you guys see the distinct differences here between clear uptrend? Look at how these bands are split up and rising, all separated. And then this sideways market where everything is very tight, right, in your range trading, and then you break down and your bands spread out again and you're in a clear downtrend now. You guys see that difference? All at the same time, right? You guys remember, right? The weekly, 200 and pi are essentially the bottom of the bands on the monthly. So you can see your monthly chart on the weekly without even having to see it, right? This is the bottom of your monthly bands, right? So your monthly bands are still in an uptrend. And this makes sense because overall, long-term, Bitcoin is still making long-term higher highs and higher lows anywhere between here. So truly got a lot of room to go before it's not making higher highs and higher lows. But we see how that works, right? cycle up, cycle down, cycle up, cycle down, cycle up, cycle down, cycle up, cycle down. And eventually, it'll all happen again. It's all part of cycles. Okay, and then once we go from, I know we don't use the monthly all the time, but going from monthly to the weekly, let's keep checking this out, right? The weekly 8, what is that going to give us? That's going to give us the direction for our swing trades on the daily, right? And we can see here that the direction of the weekly 8, which I highlighted with this red line, lines up with the direction of our daily bands, right? Our daily bands were rising until here, which on the weekly was exactly where price broke down below the 8. Look at that. Likewise, a great time to have been taking profits from this bull trend. And then let's go see the bottom of the weekly bands, if that lines up with the 200 and or pi on the daily. And check it out. Always in between, at or right around this 200 and or pi. And from this, we can really see the weekly chart without even opening the weekly. Right? Pi was rising on the daily all throughout here, which means your weekly bands were rising, which means your monthly 8 was rising, right? You guys seeing all these connections here? Remember, monthly 8. I'll just go back and highlight it right now. Why not? The monthly 8 was the direction of your weekly trend, right? And then your weekly 8 is the direction of your daily trend, right? And then by using those two time frames together, we can see our monthly direction just from the daily chart. Because we can infer if pi is rising on the daily, that means my bands are rising on my weekly, and that means my 8 is rising on my monthly. Again, this is actually not quite that close. But that's why I'm saying they're not exact. It's really just a visual help. Right? So very cool stuff there. And in the bottom of the bands on the weekly, which I just highlighted, is the 200 or pi on the daily. We could see multiple touches of that region. Making sense? And then I'll have to open up a new chart because BLX won't let me use the 4-hour. And now we can go even further down and look at how the daily looks. Get some info about the 4-hour. Okay, so we'll highlight our daily 8 here. Right, just to get some good comparison going. Close enough. The end, we'll make sure to note it's kind of wonky. All right, so the daily 8 on the 4-hour is going to give us the direction of our 4-hour bands, which means the daily 8 gives us our intermediate term trend direction. And if we're taking day trades, we want to be trading in the direction of our intermediate term. Same thing goes with swing trades. We want to be swing trading in the direction of our intermediate term and our long term. And we want to be day trading in the direction of our day trade and our swing trade. Okay? So the daily 8 is the direction of the 4-hour trend. Likewise, the bottom of the daily bands, bottom of our daily bands here, will coincide approximately with the 200 and or pi on the daily. And here you can see follows nice and tightly with pi and the 200. And then when does price break down below pi and the 200 on the 4-hour? When it breaks down below the bands on the daily. So likewise, we can see, all right, we're breaking the bands on the daily. We're breaking higher lows. We're breaking pi on the 4-hour. We're breaking all these cyclical marks, okay? It's probably time to take some profits. Going further into it, right? Check this out. You remember what that red line was, right? The red line right now, keep this in mind, guys, is the bottom of the daily bands, which is also 4-hour pi, which is also the weekly 8, which is also the direction of your monthly. All of that from 4-hour pi, right? So we can get all that information while still being on our intermediate term. So now I'm going to take away the red line, but look at pi as our daily bands and the 4-hour bands as our daily 8, right? The daily trend is rising. The daily gets a pullback. It goes back to rising. Daily gets a pullback. Gets a 2-step pullback. Now the daily is rising again. Another slight pullback. Now the daily is rising. So you can be trading your day trades in the direction of your intermediate term trend, right? All while you see pi is rising on the 4-hour. So you know your daily bands are still rising, which means you know your weekly 8 is still rising. So you know your long-term trend is still up, right? I know a lot of comparisons, so I can understand getting confused, which is why I always take messages 24/7 in the chat. Please feel free to reach out if you do not understand. And then, we can go one step further even and see, we can go 5 steps further. You can go from the 4-hour and see these same principles apply on the 1-hour, and then the 1-hour to the 15-minute, and the 15-minute to the 5-minute, and the 5-minute to the 1-minute. Which means you'll start to see the chart differently. You'll start seeing, wow, my monthly, we'll be in a monthly upcycle, but we'll be in a weekly cycle pullback in this upcycle, while our day trade is coming up in an uptrend, but we're in an intermediate term pullback, but also a near term uptrend. And you have all these different trends going in different directions. But what it means is that you can always be where the money is. And we'll go look at the monthly to see this, just to give an example here. I can go back to BLX now. You guys see me using this BLX, Brave New Coin Liquid Index. It'll give you the most charting history of Bitcoin on TradingView, right? I go all the way back to when Bitcoin was a penny. But you can't go lower than the daily. That's the only downside. And it doesn't update instantly, right? So we'll see the price is still 4,000, even though Bitcoin's come down a few $100 from there. All right, but we'll see this fractalness, coin that term. I don't know if that's a term. We'll see this fractalness play out here, right? And we can see how we'd be profitable trading with the cycles on the monthly, 80% with the cycle cross, and then trail out 20% with the rest of it. And keeping in mind, the monthly is helping us with the weekly. So occasionally, like here's a good example, the monthly crosses up again here. And by the time that happens, price is already pretty far from the low point. But that still led to a very promising upcycle afterwards. But let's see, on the weekly, we certainly could have found a better entry than up in here, right? So we don't have to, we don't have to look at the higher time frames as if we're just going to trade based off them, unless that's what you like to do, right? If you just want to long-term invest, monthly time frame is your thing, and weekly, right? And then check out how waiting for your cycle cross And then getting out with the cycle cross led you to be very profitable. So this was your entire runway, right? And then hopping in on your weekly, you can trade all these cycles in that runway. And likewise, you can go inside of that weekly and you can be trading your intermediate term swing trade, all those cycles in the direction of your longer term monthly upcycle. Make sense? That makes sense? All right, and then likewise, since the top, since this started coming down here, look at how great of a time that was to take some profits on Bitcoin, right? And what happened there? You broke down from the monthly 8. You broke down below the weekly 8. You broke down below the daily bands. You broke down below 4-hour pi line. Remember, bottom of the daily bands is 4-hour pi line. So now going all the way back in this moment, when you notice, and I regret to say I did not catch this anywhere near as beautifully as the model can. But when you see the monthly cycle cross down after being so extended, you see your monthly cycle getting high, you can watch for the weekly cycle to break down below your 8, be taking profits too, right? Because then you catch the break on the 8 on the weekly before the break of the 8 on the monthly. Furthermore, you can get out before the break of the 8 on the weekly by catching the break of the 8 on the daily. And check this out. This is a power trend here. Look at this. Price barely even retraces to the 8. And finally, when it does break down right here, that was your earliest exit. The cycle cross, everything. And really, if you've been in since here, the real move is to book profits into here and then trail out the piece on the daily, and you can play lower time frames, re-enter on setups, right? And then even further, I mean, I can do furthermore, on and on and on. You can always go deeper with this analysis, which is another reason I really like it. It just keeps on applying on each time frame. So that comes to a good question. Which time frame do I manage my trade on? All of them? I mean, kind of, yeah. It depends. Really, it depends on you. And it depends on how much you want to trade, how often you want to trade. It depends on kind of on your ticks, right? If you're really impatient, maybe it makes a little more sense to stay away from the charts occasionally. You might make some rash decisions. So maybe you just trade the 4-hour. You're only checking once a day or a few times a week. But if you want to get into the day trade side of things, everything we're looking at here on the monthly, on the weekly, on the daily, it's all the same here on the 30-minute, right? Break the bands, cycle to pi, break below pi, we're in a downtrend, right? Nothing is different. And look, this is a month, half a month of chart history. And look how many cycles we have to be trading around, right? And the same things with the bands, with the 8, the pi, the 200, it all still applies all the way down to the 1 minute. And that's one thing I really like about this model. You'll find, I'll be managing a trade because when it comes to crypto, especially, I'm in crypto for the long term. I still believe that we are incredibly early in this space. I don't believe we've missed out on anything like that. So I've got a piece in this for the absolute long-term wave until Bitcoin is dead, essentially, that I won't really get out of. That makes sense. And then based on the weekly and the monthly, I'll have long-term investing positions. Like right now, I'm long-term core short until we break back above like 6,500, right? Because unless price does this, nothing, we're not good. Price can do this. Price can stop halfway, double, triple top, who knows, right? Until that's broken, I'm core short for the long term, right? For however long it takes. But that's a different kind of long term than I mean when I talk about, crypto as a whole over the next decade. There's long term, the next few months to a year, and there's long term 5 to 10 years down the road, right? So 5 to 10 years down the road, I will still have some Bitcoin from these days. But right now, it makes more sense to be short because of all the resistance above you. That makes sense. And then, but at some point in this, right, even though I'm core short until here, there might be a really nice risk reward pop on a long from a resistance down here up to this level. So it might make sense on a daily, the 4 hour, to be taking some long plays. There might be some good day trade opportunities. Because even though we're in a long-term bear market, you can still have these near-term uptrends inside of them, right? And we'll make more money playing the downtrends, and that's why I'm core short. And if we come back up here, I will be shorting to play any next down move we get. But you can still play some contrarian longs because let's go back and look at the monthly. Right? Cyclically, we are very low. We're back near the bottom of the bands. The cycle is low, still coming down, not crossed up. But long term, it does not actually look half bad. And it's likely we just need a sideways. Right? But your 8's still coming down. You're still below the 8. So you know that resistance is still up there. Right? So hopefully you guys did not get too confused hopping around from the monthly, the weekly, the daily, the 4 hour, the 1 hour, yada, yada. And hopefully you were able to take something away from this idea, this fractal model, because it's really cool. And you'll start to notice things happening on the monthly that line up just right with things on the weekly. And then when that happens, when you start to get, a monthly cycle low with a weekly cycle low and you're holding the 8 on the monthly, you're back near the bands on the weekly, blah, blah, stuff like that. When these things start to line up, that's when you get the absolute best risk reward in your trades, right? As opposed to, this one thing on one time frame is telling me one thing. Well, we've got multiple time frames all lining up and giving us a better edge than just one thing on one time frame. Okay? And so that's the real takeaway I want you guys to get from this. All right? If you guys have any questions, feel free to shoot me a message in the chat and I'll get back to you as soon as possible. All right? Peace out, guys.